Good morning, traders and investors. Roger Scott here, Senior Strategist for Wealth Press. Today is Wednesday. It's May 24th. It's about 7:45 in the morning. The market's going to gear up to open up in about an hour and 45 minutes. I've got a lot to talk about today, but before I get into all the juicy details, make sure to like this channel, subscribe to this channel on YouTube, the Wealth Press YouTube channel. Just go to YouTube, type in Wealth Press, like these videos, subscribe to these videos, and post questions and comments. I respond there. And if I haven't answered your question there, send me an email, support@marketgeeks.com. Now, let's get going. So the Dow's down about 110 points. The Nasdaq is down 53 points. That's a little more than random. Now, think about this. The Dow's down 33,000, down 111. Nasdaq's at 13,000, down 54. That's about as equivalent. But there's a lot of stuff to talk about today. First of all, you got to keep an eye today on the semiconductor index. Not only the semiconductor index, but the QQQ. Notice the semiconductors are starting to cool off. This rally starting to fade, and price action's going back into its trading range. Well, it's not just the semiconductors. It's also the QQQ. As you can see here, this is the equal weighted QQQ. As soon as it hit resistance, it started falling back, and I think it's going to fall back into this range right here quite a bit. Even if you take away the equal cap and put in the regular cap, you will see that it looks a little overbought. And I mentioned to you guys that the level of overbought here was higher, the highest that it's been since, here, I'll actually show it to you. The highest it's been since right here, 21, October, November 21. So this looks like it really needs to cool off, maybe go to the 320 area before we see any more upside. And that's going to drag down the SPY with it, because the SPY has a lot about, it's got about 20-25% QQQ or tech in it. So I'm expecting the SPY to cool off too. Now, don't say I didn't warn you about this. Divergence right here, divergence, great gross overbought levels. And most importantly, what did I talk about the tech sector a few days ago? Remember when this was at 90th percentile or 90th something? Just a few days ago, right here. What did I tell you? I said this thing is going to cool off. It doesn't have the momentum to keep going. Now, on top of all of that, you've got to watch the semiconductor index today. Why? Well, I'm going to tell you why. Because NVDA has earnings, and it's already down pre-open over 1%, and ADI has earnings. And ADI probably already reported, if I had to guess, but the stock is down over 5%. So unless there's going to be a miracle today, unless a miracle saves the semiconductors, and semiconductors make up a huge portion of the QQQ and entirely SMH, and SMH is extremely correlated to QQQ. Look at this chart, and then look at this chart. Let me just pull up the same type of chart. You will see, I mean, look at this chart right here. And look at this chart. They're very correlated. They have about the QQQ has about 20-25% chip stocks, or stocks that are related to chip stocks. And remember something, if chips get negative news, all the other stocks related to chip stocks like computers, networks, and so forth. So tech is very connected. And remember, NVIDIA and ADI, they make chips for computers, 3D systems, networks, all sorts of stuff, large scale 3D projects. So it can have a very strong ripple effect into stocks like Microsoft, Amazon, and so forth and so forth. So you got to be really, really cautious, because I'm turning very, very bearish on the QQQs right now. I think this is a grossly overbought level, and I don't think it's gonna go up much higher. So the sentiment is getting really nasty towards chip stocks and tech stocks, which may put some market cap back into value stocks. So I'm looking for the Dow, actually. I'm looking for the Dow Jones, which we'll look at right now, to cool off around these levels and consolidate. I don't think the Dow has as much downside, and it ain't overbought. It's actually oversold. So a lot of consumer staple stocks, a lot of the stocks that we've been holding that have been doing horrible the last few days or over a week look like they could be turning around. Like, for example, we wanted to liquidate XLP yesterday, but when we looked at it and realized, and I'm glad my assistant Matt found this, he saw that the RSI level was, look at this, real low. I mean, real low. And we're near the support level here. So liquidating it at this point would be kind of foolish, because it's really due for some upside move, and I really still like this sector. The other thing you have to pay attention to is the bond market. The bond market looks like it has bottomed out. It's already a little bit higher, and I think we're going to see some flight to quality over the next couple of days. In terms of volatility, Today, we're going to have FOMC minutes, which will probably keep the market kind of calm because tomorrow we have the GDP report. Now, this is the biggest report of the quarter, and this report is going to probably show that we're growing at a clip of 1 to 1.1% over the quarter. So there's still some upside potential in the GDP, but it'll be very interesting to see. I'm curious about personal consumption expenditures being near 3.7%. I want to see if the expenditures are rising or lower annually. This is going to be a bigger number for me because GDP can be revised, but this personal expenditures is a fairly solid ploy. Now, let me talk to you guys a little bit about the broad market, and then we'll go from there. All right, speaking of the broad market, let's do a little bit of a review, and then we'll get into the nitty-gritty. Three major U.S. benchmark indices all finished the regular session lower as worries over the U.S. default hurt risk sentiment. I don't think we're going to default, but the further it goes to it, the more negative the sentiment will get towards the economy. Market participants are all waiting for minutes from the Federal Reserve last meeting. Representatives of President Joe Biden and Republicans ended another round of debt ceiling talks unsuccessfully. McCarthy left the Capitol late Tuesday afternoon stating that the two parties were still unable to reach an agreement and to prevent the first ever U.S. default, and it's not going to be the first one. Trading session on Tuesday, tech-heavy Nasdaq, and I hate to say I warned you about this, but I warned you about this big time. Underperformed major benchmarks pressured by a drop in mega cap tech stocks. What a surprise. We never would have seen it coming, right? Wink, wink. I mean, it's like, look at this momentum levels. Where do you think this thing is going to go? To the sky and back? Come on, let's be real here. Where are we? Oh, yeah, here we go. Pressured by mega cap technology stocks after now another round of debt ceiling talks ended without any major progress. The S&P also closed in the red because they have a lot of those type of stocks. You don't think the Apple is in the S&P 500, Amazon, Meta, and all those stocks? Also, industrial and communication stocks. Well, communication stocks are large cap tech stocks. So communication stocks is the same thing as what we're talking about. But industrial, that does worry me quite a bit. Economic data showed on Tuesday that global composite PMI rose to a 13-month high, stronger than expected, driven by service providers, while manufacturing activity contracted. And this is not the first time we're seeing manufacturing contract, which is not good for growth. New home sales rose to more than a one-year high of 683,000, stronger than expected. I'm happy about that. Richmond manufacturing again came in weaker than expected. And remember, a lot of manufacturing supplies are made in China, and China's not doing all that well. Now, here's where things get really interesting. Kashkari said Tuesday that the Federal Reserve might need to keep interest rates high for longer if inflation becomes more entrenched. What a shock. Nobody ever saw that coming. I'm amazed at this. I'm being sarcastic, obviously. If inflation stays high, and it is, if inflation becomes more entrenched than we realize, then we're going to have to keep interest rates high for longer. And that's going to increase the pressure on the banking sector. Really? You think? That's why I'm still short KRE. Now, interestingly, look at the futures priced in. We're going back the other way now. Remember, we were 90% that there was going to be no rate hike. Then we went to 80%. Then we went to 75%. Now we're at 67%. And there's a 32.7% that we are going to have a 0.25. Now, I'm curious if this number is ever going to get to 50 or above 50, because it was literally less than 10% a few days ago. So it's moving between 90, this number here, that we're going to have no rate hike, is moving between 60% and 90%, 60% and 90%. I want to see if it falls below 60%. Meanwhile, you've got NVDA and ADI reporting today, and already they're down for the day, and the numbers, I'm not expecting anything beautiful from there. Today, we're going to be watching the minutes from the May meeting for further insight into what the central bank's perspective on the economy is. But I'm going to tell you what it is. We're not going to raise rates. We're going to wait and see what happens, and then we're going to double up. I want you guys to understand, the Fed is not raising rates because they think economy is stable. They're not raising rates because they're fearful that it's going to push us into a worse position. They're not telling you that, but that's exactly what's going on right now. In Europe, investors digested hotter than expected UK inflation print, while an impasse in negotiations over rising U.S. debt ceilings also dampened risk sentiment. On Wednesday, UK headline inflation fell less than expected, while core inflation rose to a 31-year high. Now, how the hell they're going to get out of that one? How the hell are they going to have excuse me for cursing, but how are they going to get out of a 31 inflation? This is horrible. Losses in real estate and luxury stocks are leading the overall market lower. Well, I can imagine that if inflation's at a 31-year high. I mean, how do you even get away from that? Shanghai closed lower as geopolitical risks continue to weigh on investor sentiment. China and Russia. Whenever you hear China and Russia in the same paragraph, it ain't pretty. They plan to sign a series of agreements on Wednesday during Russia's prime minister's trip to Beijing, despite criticisms from the West regarding their ties amid the ongoing war in Ukraine. This is not going to go well in the U.S., I'm going to tell you right now. And tension between China and the U.S. is already heated up because they banned Micron technology from selling memory chips to domestic industries. Not good, because Micron's a big player here. In Japan, it's also going down. They had a really good winning streak for a while, but investors continued to lock in profits. They had an 8-day rally, while uncertainty over the U.S. debt ceilings also weighed on their appetite. Meanwhile, travel and retail stocks plunged on Wednesday amid concerns over China's latest COVID wave and potential slowdown in the U.S. economy. Now, this is the first I hear about it, and it's also kind of interesting that they're talking about China's COVID wave while they're talking about Japan, and they didn't mention anything about Chinese COVID wave during the Chinese discussion. So I'm going to have to look into a little bit closer, and I'm worried that they might have confused the word Japan with China here. So I got to see if there's another COVID wave coming. You'd have COVID, the debt ceiling, the technology stocks, 31-year high in European inflation. Oy, oy, oy. Today, news Intuit down 5%. That's a tech stock. It's a tech stock. Toll Brothers gained over 3%. They had good numbers. Pan W climbed over 4%. That'll offset some of the downside. And again, NVIDIA and analog devices is what you want to watch. You do not want to trade tech stocks today or chip stocks because there's going to be a lot of volatility, especially chip stocks. Now, because today is Wednesday, and what do I always do Wednesday? I give you actionable trade ideas. That's right, actionable trade ideas. So let me give you one right now. So I'm going to find them for you in real time. All right, those are the best kind. Let's see what Uncle Roger's got for you today. And by the way, if you're liking these videos, comment. I want to hear from you. I want to know what you guys got to say for yourself. All right. So what stocks does Uncle Roger like right now? Well, it looks like all the large caps are starting to fall apart, but I like Cardinal Health right now. I think Cardinal Health is going to hold. I wouldn't touch Meta with not right now, not in light of everything that we're seeing right now. But let me see here. Man, it looks like everything is taking a little bit of a dump. Let's go to my 24-week high. Ooh, AMD looks like it's going to drop. That looks pretty nasty. Let's see what I find. Everything looks overbought right now. Everything's looking overbought right now. Let's see here. Let's see what Uncle Roger can find for you. All right. Here we go. Don't do tech right now. Don't do tech. Honestly, if I had to make a bet right now and if I had to put my money on the line, I would probably, there was one stock that I really liked, and it would probably be General Electric. I think this downside is going to correct. I think we're going to go higher on it. I think this was just a nasty print yesterday. I would be buying this pullback to the downside right now. That looks like a pretty good pullback to me to the downside. Another one that I really like right now, is Trade Desk. Now, this is sort of a techie stock, but not as techie. It's more of a service stock than anything else. But I do like that stock right now. But so those two, GE. I also like Kroger right now. So I like Kroger, I like GE, and I also like DraftKings. That's right, DraftKings, GE, Kroger. And what was that other one that I said? There was one. It was what was it? It was right here. It was just a minute ago. Trade Desk. That's it. Those are the ones that I really like to the upside. To the downside, there's some stinkers out there. I'm going to tell you. To the downside, let me find you some good ones here. Shorting some bearish tech stocks right now wouldn't be the worst thing in the world, actually. Let me do this. There's a better way. Here we go. Let's reverse these. There we go. Oh, yeah. So CTLT, I would sell the stock right now like there's no tomorrow. Lincoln National, I would sell the stock like there's no tomorrow. And Match.com, I think the stock is a dog. Also, Boston Properties. Boston Properties, Match.com, Catalent, and Lincoln National. I think I gave you several. Now, keep in mind the highlights for today. Stay out of NVIDIA. Stay out of ADI. Be really, really careful with technology because it looks like we're on a downslope. Stick with stocks like consumer staples, stocks that are more defensive. Those stocks should rally because market cap will go from tech stocks into those defensive stocks. Now, keep your eye on China, and let's figure out if COVID is starting up again. If COVID is starting up again, that's going to be really bad for consumer stocks, and that's going to put manufacturing back on the burner. The volatility on NVIDIA today is 7.2%. That's the expected move up and down. So you don't want to be anywhere near there. I don't have the number for ADI, but I do have it for Snow, which is another stock that's coming out with earnings. Let's see how they're doing today. Pre-open. Down 3 points yesterday, already down. This thing looks like it's on a ledge and it's ready to cool off. I'm telling you, it doesn't look all that great right now. Now, folks, here's what I want to tell you. Do you want to tap into the potential gain of crypto without touching a single risky token? Of course. Wait till you hear about this. Jeffrey Turnmeyer, he's an engineer by profession, by the way. He's discovered a way to trade Bitcoin without ever leaving your brokerage account. That's right, your regular stock brokerage account. It all has to do with targeting specific windows and trading during those times. The next window is about to open. It's opening on Friday, actually. And Jeffrey's just revealed exactly how it works. Click the link below. Check out this presentation. You don't want to miss out. Don't forget, like our channel, subscribe to us on YouTube, go to the Wealth Press YouTube channel, subscribe to my Telegram channel, and if you're looking for the link to Jeffrey's presentation, it's in the YouTube channel below this video. You guys have a great day, and I'll talk to you soon. Bye. Be careful of Nasdaq right now and chip stocks. Be really, really careful.